for 5 minutes.
Thank you, Madam Chair. I thank the ranking member. I thank the witnesses for appearing, and I especially thank you, Ms. Fish, for being here today. You have brought some degree of balance to the panel. I especially appreciate the fact that the Democratic staff invited you to come to give some degree of balance to the panel. And without going to any specificities, are you familiar with the entities that these 4 white men work for?
Yes, I am.
Are there smart women working for these entities?
I believe there are, yes.
Are there women working for these entities who could testify about the issues before us today?
I couldn't answer that question, sir.
I see. But you believe they're smart?
I do.
Okay, thank you very much. Let's go on with the traditional questioning. I have a question for you, but within the question, I have a question. So I'll read the question, and then I'll go to the question within the question. And I thank the staff for assisting. The question is, can you explain how these rules will help to protect retail investors who might otherwise struggle to obtain or interpret climate-related risk information about their investments? That's the question. But now the question within the question is, define, if you would please, what a retail investor is for the public.
Thank you. So retail investor are regular people like us, as opposed to institutional investors, mutual funds, pension funds, and so forth. And most retail investors invest through intermediaries. Many of us have stock in mutual funds in our retirement plans, right? The way this rule helps is the people who run those retirement plans have come to the SEC for years, and they've said, we need this information. And we need this information for several reasons. One, it helps us understand the financial value, the economic value, the sustainability of these companies in which we're investing our customers' retirement savings, right? And we have a fiduciary duty to collect and evaluate all material information. We need it, we're not getting it. But there's a little bit more. Retail investors have a variety of investment preferences. Some of them want to invest in carbon zero funds. Some of them want to invest in the Catholic Values Fund. So institutional investors have an obligation as part of this robust capital market to satisfy those different investor preferences. But you can't do that. You can't construct a fund that meets those preferences without having access to the underlying information.
And is it true that the larger investors, some of them have persons available to them to do research to help them to acquire the intelligence that you've referenced? Is this a fair statement?
It is a fair statement, but one of the, I think, repeated statements in the SEC's comment record is even the largest investors are spending hundreds of thousands, in some cases millions of dollars, trying to obtain this information. They're paying third-party providers. They're asking companies to fill out extensive questionnaires because they're not getting this information in securities disclosures.
And this is something that the retail investor, the people like you and me and other persons who are investing in retirement accounts, they don't have the wealth to acquire this level of intelligence, do they?
That's absolutely right. So mandatory disclosure, as you say, creates a level playing field for all investors.
And as we're going about doing this, making sure that we level the playing field is the way I see it, so that the retail investors, the people who just don't have the millions, can make proper investments. As we go about doing this, is there a way to do it other than to require some disclosure and try to make it uniform?
Well, Congress decided in the 1933 Act and the 1934 Act that no, mandatory disclosure was the best, the most efficient system for getting that information to all investors.
Well, I want you to know I stand with these retail investors. I stand with the average person who's trying to make an investment And I want the playing field leveled for that average person. Right now, they're at a disadvantage. This rule can help us to give them the same opportunities to invest that others have. Thank you, Mr. Chairman. I yield back. Madam Chair, excuse me. I yield back.
Gentleman yields back. The chair now recognizes the gentleman from Michigan,